Good morning, everybody. Happy Thursday. Today's January 18th, 2024. And the top story this morning, earnings season. We're into full swing now. We got some regional banks today. The big one we got was Taiwan Semiconductor, the biggest chip maker in the world. They make the chips that go into pretty much everything. And their revenue and their profits were down. It's amazing because I hear so much about semiconductors. I hear so much about how the AI chips, how there's just, oh my God, the demand is so ecstatic. They're making so much of them. They're going to make so much money. Then how come the people who make the chips are making less money? That's interesting. Put a pin in that one. Taiwan Semiconductor revenue down 1.5% year over year. Not a huge decline, but at a time when the revenue numbers from all the semiconductor companies, notably the AI ones, Nvidia, AMD, way up. Yet the people, their customers or their suppliers' earnings are down. A little bit of an accounting mystery there. Net income at Taiwan Semiconductor down 19.3% year over year. Big drop in net income. Now, you've got declines in smartphone demand that are going on in the market, and I guess that is being partially offset by increases in the demand for the more complex GPUs and the AI chips. Possibly that's an explanation for what's going on here. But then again, we just got a big upgrade from Bank of America for Apple stock this morning, and they're saying, well, we think Apple looks good here because of the strong iPhone upgrade cycle. That doesn't make sense because, well, Apple just cut their iPhone prices in China yesterday. That's another story we're going to have to touch on here. So if you've got a strong iPhone cycle, why are they cutting their prices in China? The Apple upgrade also referenced the Apple Vision Pro. Remember that ridiculously heavy goggle with the wire hanging off the back that everybody basically laughed when they said it was going to charge $3,500 for it? Analysts are upgrading Apple stock on that thing. Guys, the customers laughed at the company when they saw the price tag. Maybe we'll want to rethink that upgrade. Hey, I'll just throw them out there. Also, while that's going on this morning, we got some mid-level banks. We got Truist came out, and even though their stock is up this morning, all the little banks also taking hits from the FDIC. We saw that with the big banks, charges to replenish the deposit insurance fund. That's hitting the earnings. But something that stuck out at me with Truist, a $6.1 billion goodwill impairment charge that the company says it won't affect their capital, it won't affect their liquidity, it won't affect their ability to pay dividends, it won't affect their ability to service their clients. Yeah, it's just $1.1 billion. It wipes out all of our earnings for the quarter, but it's totes okay. Nothing to see here. Can somebody please tell me what is a $6.1 billion goodwill impairment charge? Some asset or assets, a freaking ton of them, are way down in value. They're not telling us what there is. None of the articles I saw this morning, none of the discussions or press release mentioned any details about that $6.1 billion hit at Truist. Just that it was a goodwill impairment charge. Boy, is that goodwill impaired. We're going to impair the heck out of that goodwill, you guys. $6.1 billion of it. Someone want to tell, please, anyone in the comments, anybody want to tell me what that means? Because that just right over my head. MNT Bank also reported today their profit was down 37% year over year. Big decline in M&T. They're also taking the hit from the FDIC, just like Truist is doing. But instead of a $6.1 billion goodwill impairment charge, M&T is having to pay a lot more money for deposits. They've had to raise their interest rates to compete with the bigger banks. We've seen a lot of that with the smaller banks and the regional banks. Their net interest margins are getting squeezed because they have to pay higher rates to retain the clients who got spooked last year during the small bank failures. A lot of companies are going out and buying brokered deposits where they basically buy deposits from other banks. Say JP Morgan locked up a bunch of people in CDs for two to 5 years. So they've got cheap deposits at low interest rates. JP Morgan can actually take that deposit and they can sell it to an M&T bank for a lot more money, like say 5%, and M&T Bank has no choice but to go buy it because they need the liquidity to meet withdrawals. So it's possible broker deposits are playing a role in that M&T earnings call there, but a big drop in profit on that FDIC charge and the higher expenses. We've got people are piling out of GBTC, the Grayscale Bitcoin ETF, formerly known as the Grayscale Bitcoin Trust. That one's kind of funny. I saw something yesterday on CNBC that made me laugh a little bit. And then when I went and looked, I said, well, yeah, that makes perfect sense. People are fleeing that one, looking for higher fees. Barry Silbert's ETF is not off to a very good start after the SEC approval. The Houthis have been declared a terrorist organization by the Biden administration. So, of course, that means that the shipping carriers that were rumored last week to be paying protection racket money to the Houthis in order to get safe passage, well, now they would be financing terrorism and subject to U.S. sanctions. So that might change the dynamics in the Red Sea, declaring the Houthis a terrorist organization, although launching missiles at boats, hijacking ships is kind of a terroristy thing to do. It's really not that big of a stretch here, guys. Iran is trading missiles with Pakistan now. All right. Who had an Iranian-Pakistani war in their 2020s bingo card? Anybody on that one? Who saw that one coming? I guess everybody in the world is fighting 3 wars at once. Let's have another one. Sure. Pakistan, Iran for the win. Why not? People trying to make the world worse are just not taking the day off, guys. Look, what can I say about that one? We got some more data in today. We got initial jobless claims, 187,000. That's down 16,000 from last week. Pretty good number from the Labor Department there. Continuing jobless claims were also down 26,000 to 1.806 million. So the labor market looking pretty good right now. Better numbers versus last week. Better numbers than I would expect because we're starting to see anecdotes of layoffs again. But the data coming out today is pretty good. Although the Philly Fed Manufacturing Index was also pretty bad. Again, not as bad as that Empire State Manufacturing Index we got earlier this week, but still negative territory. Manufacturing in the U.S. is in sharp decline virtually across the board. With that, why don't we shrink my big melon of a head? Let's see what's going on in the markets today. Guys, don't forget that like button. It really helps get the word out about the channel. And, well, hit that subscribe button if you're new here. Have your coffee with the melon heads. We do this one every morning. S&P 500 is currently up 17 points, 0.36% higher. It's had a rough couple of days, so it looks like we're bouncing back a little bit today. The Dow, though, still in negative territory, down 68.7 points, about 0.2% lower ahead of the opening bell for the Dow. But the Nasdaq's looking great this morning, up 0.82%, 136 points higher for the tech-heavy Nasdaq. The U.S. dollar, it was down. Now it's starting to strengthen a little bit, possibly on the backs of that better-than-expected labor data. We've got 103.62 on the Dixie, up another 17 basis points this morning. The dollar has been really on a tear the last couple of weeks. That's starting to put downward pressure on asset prices. And we have got bond yields are also largely moving higher again. A little bit of red on the short end of the yield curve this morning, but everything else is green. Remember, guys, bond yields going up is bond prices going down because of the inverse correlation. So we got a little bit of sell-off in bonds here this morning. The 30-year, 4.34, that is down about 3 basis points. The 10-year U.S. Treasury, 4.122, up another 2 basis points. Guys, we were around 3.8, 3.75 just 2 weeks ago. The 10-year is creeping back up here. Is this a dead cat bounce, or have we turned and we're back to that regularly scheduled upward move in interest rates? Let me know what you guys think in the comments on that one. The 2-year, 4.365, that's up 1 point this morning. And the 1 month is still sitting at 5.38, down almost 1 point this morning. Looking over at commodities, we have got February gold futures, $2,012. That's up almost $6 this morning, about 0.3% higher. March silver futures, $22.57, down another 10 cents or about 0.5% this morning. Silver's had a tough week, lost over $1 now. Let's see what else we have going on here. Platinum up 1.5%. Palladium is up 2%. West Texas Intermediate crude oil, March futures trading at 73.04. That's well up from yesterday. Up 56 cents or about 0.77% at the moment, possibly on escalations in the Middle East. But let's get into the main story here. Taiwan Semiconductor beats profit and revenue expectations in the fourth quarter. Guys, the phrase beats expectations or missed it no longer means anything because they just lower expectations right before they announce so that no matter what the numbers are, it's a beat. All right, so when you hear, oh, my God, the headline came in, it's a beat, quick, go buy the stock, you got to read more than that, okay? Everything is a beat now. Everything. It's always a beat. When's the last time you heard missed estimates? Maybe 1 out of 10 companies misses estimates because they just lower their estimates to make everything look good. It's part of the way the financial press makes itself the punchline of a joke. Taiwan Semiconductor beats profit and revenue expectations in the fourth quarter. Let's get a little bit into this. The world's largest contract chip maker, Taiwan Semiconductor Manufacturing Company, or TSMC, on Thursday posted better than expected profit and revenue on the back of weaker macroeconomic conditions. Wait a minute. Better than expected earnings on the back of weaker economic conditions. Positive flowed right into a negative there. You see what I'm saying about how they just lower the expectations to make it say whatever they wanted to? TSMC reported revenue slipped 1.5% from a year ago to 625.5 billion. I'm guessing that's Taiwanese dollars, while net income dropped 19.3% from a year ago. Net income down 19.3. These are the guys who make the chips for Apple and Nvidia. Apple's getting upgraded and Nvidia to the moon, bro. How come Taiwan Semiconductor's profits are down 19% for the year? One of these things is not like the others. That compares with TMC's guidance for fourth quarter revenue between 18.8 billion and 19.6. So, yeah, I guess it was a beat on what they were expecting, but what they were expecting was artificially low. In the fourth quarter, revenue increased 14.4% sequentially. That's versus the prior quarter, so that's a pretty good number. That was supported by continued strong ramp of our industry-leading 3-nanometer technology. That 3-nanometer technology, that's what they use to make the AI, the GPUs. So I guess you could see some of the Nvidia stuff pulling through into Taiwan Semiconductor there when they say the 3-nano technology is driving sequential increases in quarterly revenue. Okay, now it's starting to make a little more sense. Taiwan Semiconductor counts Apple and Nvidia among its bigger clients. TSMC produces the most advanced processors found in Apple's iPhones. During the firm's earnings call on Thursday, CEO acknowledged that 2023 was a challenging year for the global semiconductor industry because of macroeconomic conditions and an inventory adjustment cycle. Chip makers such as Samsung and SK Hynix have reported declines in quarterly profits due to a post-pandemic plunge in the demand for consumer electronics like smartphones and laptops that resulted in smartphone and PC makers grappling with excess inventories of chips. But analysts say chip inventories at smartphone and PC makers are running down and expect restocking demand to pick up. And I've been hearing about this restocking demand for a while now, and yet the manufacturing numbers just keep getting worse. When is this restocking going to happen? And again, look what they're saying here, guys. Terrible macroeconomic conditions, slowdown in demand for consumer electronics. But analysts say things are looking up. Analysts, things are getting better. Why? Just because. And here, look no further than this one in investing.com this morning. Bank of America upgrades Apple, expects AI and Vision Pro, pardon my laughing, to drive upside. Yes, the Vision Pro, that ridiculous goggle that everybody laughed at when they unveiled the price tag of it, they're saying this is going to drive upside. Who's going to buy the $3,500 Apple goggles? Again, call to action in the comments. Let me know. Do you plan on buying these things? What are you going to do with them? The technology is neat. Oh, yeah, I can throw a football game up on the wall with the flick of my hands. It's just like the movie. I forget what movie it was. I get it. The technology is neat, but $3,500, guys, people can't pay their rent. People aren't paying their bills. People are using buy now, pay later to buy freaking groceries, and they're going to buy a $3,500 Apple Vision Pro? Okay. This sounds about right. Apple shares jumped nearly 2% in early New York trading on Thursday after Bank of America analysts raised the stock's rating to buy from neutral. Now, remember, guys, we had 2 Apple downgrades to start the year. Now we've got an upgrade here. A more bullish stance on Apple stock is supported by several factors, including stronger multi-year iPhone upgrade cycle, even though we just got done hearing from Taiwan Semi that said demand is way down for chips for smartphones. Higher growth in services, that's true. Strong capital returns. Moreover, analysts expect the negative EPS estimate revisions are behind Apple. Apple's had some pretty rough quarterly reports recently. The upgrade move comes as investor focus shifts toward the expected launch of the Vision Pro next month, as well as AI-powered iPhone, which is expected to arrive in late 24 or late 25. If you say so, guys, if you say so that this $3,500 set of goggles is going to drive growth and that the Apple upgrade cycle is looking optimistic, that's great. Never mind this here headline that says Apple cuts China iPhone prices. Wait, what? Cutting prices? That usually doesn't mean a strong upgrade cycle. Why one analyst isn't worried? It doesn't matter if they cut prices. It doesn't matter if they don't sell, guys. The analysts aren't worried, so number just going to keep going up. Apple is reportedly cutting the price of its iPhone in China Creative Strategies principal analyst Ben Bajarin notes that the price cut comes as China enters the Chinese New Year, which he says is a normal time for promotions. Bajarin says that overall that the smartphone market is in a period of recovery. Yeah, it caught you in a transitional period, Jules. There's a term for that. Though replacement cycles now run longer across smartphones, he views iPhone demand trends in China rebounding off lows. Yes, they're rebounding so much that Apple is cutting their prices, and the people who make the chips that go into this phone are posting 19% year-over-year declines in profits. But you know what? The analysts are optimistic, and so Apple stock this morning is up $4. Looks like 2.2% higher for Apple ahead of the opening bell. That analyst upgrade is really moving shares. Now let's talk about this one. This is the bigger head scratcher this morning. This one really caught me off guard. Truist reports Q4 loss on one-time charges and lower interest income. Truist Financial Corp reported a loss in the fourth quarter on Thursday, hurt by a raft of one-time charges tied to regulatory and restructuring activities and a fall in net interest income. The lender took a $6.1 billion non-cash goodwill impairment charge, which it said will not impact liquidity, common share dividend payouts, and capital ratios. Guys, this is about a $47 million market cap here. So this one-time $6.1 billion goodwill impairment charge is an eighth of the market cap of the whole freaking company. And they're just like, oh, it's okay, you guys. It's not going to affect the dividend. Won't affect liquidity, capital ratios. Nope. All good here. An eighth of the value of the company just wiped out in one line item, mysteriously worded, phrasing. But it's all good. It's not going to affect anything. Okay. Truist also paid a $507 million to replenish a regulator's deposit insurance fund that was drained after two mid-sized lenders collapsed in early 2023. We saw that across all the other banks. And they recorded another $183 million in charges related to restructuring, i.e. laying people off and paying severance. Also, we've got net interest income. The difference between interest earned on loans and payments on deposits fell 10.7% to $3.6 billion in the fourth quarter. That's declined versus a year ago. So declines in net interest margin, mystery billions of dollars disappearing in goodwill impairment charges. And guys, I looked all over. Nobody's asking any more questions about the goodwill impairment charge. Nobody's offering any more details on what that is. What went down in value so much, and why are you calling it a goodwill impairment charge? I don't know what this is here, but this is big. This is a really bad one, and it's such a huge number relative to the size of the bank. I mean, here you go. It's a $47.7 billion market cap. I mean, it's an eighth of the value of the whole freaking bank in one fell swoop, and they're just like, oh, yeah, don't worry, it won't affect anything. Okay. Truist Financial Corp, though, their stock right now is up 0.9%, 32 cents higher ahead of the opening bell. Apparently, bank shareholders just love bad news. Let's look over at M&T Bank. They just posted earnings today also. M&T Bank's profit plunges on FDIC fee-related expense and costly deposits. M&T Bank's fourth quarter profit plummeted 37% on Thursday due to higher deposit costs and a special assessment fee the lender has to pay to refill the government deposit insurance fund. The FDIC fund lost nearly $16 billion. Yeah, we get it. Silicon Valley Bank, Signature Bank. We've heard that one before. But 37% drop in profits. Yikes. That's a big one. M&T booked an expense of $197 million tied to the special assessment fee at the FDIC. Separately, M&T flagged a hit from higher deposit costs. Like several of its peers, the bank has had to pay higher interest rates to prevent depositors fleeing to other higher-yielding alternatives. The move eroded the Buffalo, New York-based bank's net interest income, which fell nearly 6% to $1.72 billion. So a big fall in their profit, a 6% drop in their net interest income. That's compared to a 10% drop in Truist net interest income. The small banks are really taking it on the jaw here, guys. Their profit margins are really getting squeezed by what happened last March. Now, maybe these banks aren't still failing. Maybe they're not on the brink of collapse anymore, but they're not making money, which means the next crisis that comes their way, they're not going to be as capable, as able to respond to it. Now, listen to this one. Speaking of the next crisis to come around, exposure to the troubled commercial real estate sector also weighed on its earnings. Not many mentions of CRE and bank earnings yet this year. That's curious. With remote working now routine for many office-based firms and consumers routinely shopping online, investors who hold commercial property face the prospect of defaulting on their loans. Partly because of its exposure to such investors, M&T more than doubled its provisions for potential bad loans. That's a big one there. No numbers to detail what that doubling is, but when a bank doubles their loan loss provisions, that is a very big deal. All right. So profits way down. Net interest margin way down at both of these banks, Truist and M&T. Loan loss provisions doubling at M&T, a mystery $6 billion hit over at Truist. Keep an eye on these regional banks, these medium banks, guys. Something is up in this sector, and they're being very curious with their language, the goodwill impairment charge. But again, bank shareholders just love bad news this morning because M&T Bank is up 1.75%, trading $2.29 higher ahead of the opening bell. Bad news is good news for banks, apparently. Now, check this one out. I saw this yesterday. This is CNBC from yesterday, and I left this window open all night because this just cracked me up. I was, doing part of my regular research like I do every day, and I noticed, good God, this incredibly annoying ad that popped up on CNBC, and I couldn't get rid of it. I was like, there's no X to get rid of or anything, and no matter where I scroll, the ad just stays right there. And then I realized what the ad was for. GBTC, the Grayscale Bitcoin Trust. All right. Barry Silbert's Grayscale, which is owned by Digital Currency Group, they paid a lot of money for this incredibly annoying pop-up window on CNBC that just won't get out of the way. All right. And it's amazing that you can glean information just from the ads that are being shown to you, because these guys are really worried, and instead of lowering their fees, they're just paying for stupid, annoying advertising. Great business move. And I think I know why. Traders pull $579 million out of Grayscale Bitcoin ETF. Remember all that institutional money that was going to flow into the Bitcoin ETFs? Well, apparently that's a little more specific to the ETF in question. There is money flowing into ETFs, but there's also a lot of money flowing out of this one. Investors have pulled over $500 million from the Grayscale Bitcoin Trust during its first days of trading as an ETF. The fund, which won U.S. Securities and Exchange Commission approval to convert to an ETF from a trust last week, has seen outflows totaling $579 million, according to data compiled by Bloomberg. It's a stark difference from the other 9 spot Bitcoin ETFs, which have pulled in a total of nearly $1.4 billion. All right, so you've still got a net inflow of about $900 million into Bitcoin via these ETFs here. That hasn't been enough to make the Bitcoin price skyrocket like everybody was saying. But the outflows from GBTC are astounding here. $579 million out of GBTC, while $1.4 billion flowed into the other 9 ETFs. GBTC is getting crushed here. Why do you think it's getting crushed? Well, it might have something to do with this paragraph. Some investors, they misspelled all of them, are fleeing to cheaper spot Bitcoin ETFs. With an expense ratio of 1.5%, GBTC is the most expensive U.S. ETF that invests directly in Bitcoin. The second most expensive fund, the Van Eck Bitcoin Trust, charges 0.25%. Now you know why money's leaving GBTC here, guys. They're charging a 1.5% management fee when their closest competition is charging a rate 1/6 of that. Which means just by dumping GBTC and going over to Van Eck or going over to BlackRock, you can get an extra 1.25% yield from your ETF just by paying less fees. And what is Grayscale doing? Are they lowering their fees to a more market-friendly rate? No, they're paying for stupid, annoying, can't get them off your screen pop-up ads on CNBC instead. Nice business move you got going there, Grayscale. Wouldn't want to lower your fees when you can just annoy people into buying your product. Gotta love what's going on with the Bitcoin ETFs. Also, the Biden administration designated the Houthis a terrorist group as the U.S. ramps up Red Sea counterstrikes. Not going to spend too much time on this one, guys, but remember earlier in the week, or I think it was late last week, there was a story about shipping carriers paying the Houthis for safe passage through the Bab el-Mandeb Strait. Like, hey, please don't missile, bomb, drone, hijack our ships. Here's a couple of bucks. Let us pass, which basically means the Houthis had become a protection racket, kind of like, the gangsters making you pay for protection when they're the ones you need protection from. Well, now that the Houthis have been designated a terrorist group by the U.S., any company who is paying them for protection is now directly financing terrorism and subject to U.S. sanctions. So this may affect some of those shipping carriers. We never did find out who it was that was paying the Houthis for protection. A couple of carriers came forward and said it's not us, but nobody was willing to step in front of that saying, yeah, we're the ones paying the terrorists for safe passage. Well, now they're going to be in big trouble if they keep doing that because the Biden administration has designated them a terrorist organization, which means you can't pay them, not without running risk of your assets being frozen. And speaking of the whole world going to hell in a handbasket, Pakistan's army strikes back at Iran as both sides urge calm. Well, it's very comforting that they're urging calm as they fire missiles at each other. I feel better already. I don't know about you guys. Yesterday, Iran launched missiles at freaking everybody, including the Pakistanis. And, well, the Pakistanis are shooting back. Imagine that. Pakistan's military carried out targeted strikes against militant hideouts in Iran on Thursday, responding to an attack by Tehran a day earlier in a rare escalation of tensions that both sides signaled they don't want to see get worse. Again, golly, I feel so much better that they don't want things to get worse. Stop shooting then. I just throw them out there. You don't want things to get worse? Don't kill each other. What a concept. Pakistan carried out morning strikes against terrorist hideouts in Iran's Sistan and something I can't pronounce province. Pakistan's foreign ministry said in a statement, the move followed Iran's strikes against the Jaish al-Adl, again pronunciation, a separatist group based in Pakistan's Balochistan. Did I say that right? Balochistan province? I got to practice my non-regional diction. Anyways, guys, the Iranians and the Pakistanis are shooting at each other. 2020's bingo update. Yay. Let's see what else we got going on here this morning. Philly Fed Manufacturing Index came in at negative 10.6. That is negative 11 out of the last 12 months. We had one little island of positivity there. What was that back in, I don't know, I guess June maybe. The Philly Fed Manufacturing Index in the U.S. rose 2.2 points to negative 10.6. So it's still falling. It's just falling slower. That's down from that is up from a negative 12.8 in the prior month, but worse than market estimates of negative 7. This is the index 18th negative reading in the past 20 months. Because soft landing, the economy is so good. The indexes for current new orders and current shipments both also rose in January, but remained negative. Again, when you hear rose but remain negative, they're still falling, guys. They're just falling slower. The new orders index rose from negative 22.1 to negative 17.9. That's a kind way of saying the index fell again. The shipment index rose 5 points to negative 6.2. That's still falling. Employment index was little changed at negative 1.8 and continues to suggest mostly steady levels of employment overall. The price indexes indicate overall increases in prices, but both indexes are below their long-run averages. So it's a little interesting here. We saw this with the New York Fed Manufacturing Index too. Prices were up slightly. Well, we did just get a negative print in PPI last week that's showing input prices are starting to fall slightly. So I don't know which one is front running the other. Does PPI suggest we could see prices start to fall in these manufacturing indexes? Or are the manufacturing indexes saying that decline in PPI was transitory and that it's going to start rising again? I'm not really sure which one front runs the other here. But suffice it to say, guys, another big time negative reading for manufacturing, this time in Philadelphia. Manufacturing sector in the United States continues to get crushed. And this inventory replenishment cycle that I keep hearing so much about, it is just not happening. New orders continue to fall every month. But things aren't terrible here. We got initial jobless claims in the U.S. The number of Americans filing for unemployment benefits fell by 16,000 to 187,000 on the week ending January 18th. That's the least since September of 2022 and well below market forecasts. So fewer initial jobless claims. That's good. We're down a couple of weeks in a row here now, guys. Initial jobless claims, people losing their job, going on the unemployment rolls, that is falling. So the big spike in unemployment, it's not here yet. Also, continuing jobless claims also fell in the U.S. That's people who lose their jobs and then stay on the unemployment rolls. That fell to 1.806 million for the week ending January 6, 2024. That's down 26,000, the fourth consecutive week of declines in continuing jobless claims. So the labor market is looking a little bit better here. This may force the market to start to reprice its expectations for Fed rate cuts. Looking over at the current likelihood of a Fed rate cut in March. Right now, CME Fed Watch is saying March. Give it 1 second to load here. Why did I have to refresh it? We are looking at a 55.7% chance of a 25 basis point rate cut in March and a 1.5% chance of a 50 basis point cut. So it looks like the market is down. We were up around 80% likelihood a week ago, the odds of a rate cut in March. So now we're down to around 57 if you combine those two. So the market is starting to price in slightly less aggressive estimates for a dovish Fed here. It's still a likelihood in March, according to the market, but much less than a week ago. We'll see if that continues to trend in that direction. And I just want to say thank you very much to Mr. Alex Liberman. Thank you, Alex. He says 8 to 12 T on top of 10 S&P are profitable via China or advertising. What are we saying? 8 to 12 T on top of 10 S&P. I'm not sure what those numbers mean there, Alex. It's almost too easy a trigger for economic collapse via defense of Taiwan. Be safe. Well, I can tell you the whole thing about Taiwan, guys, the recipe for economic collapse, if the Taiwan thing ever pops off, that's a whole, I mean, that is the great reset. Maybe that doesn't result in own nothing and be happy. I mean, maybe that's something more like you'll own nothing and most of you will be dead or, in boot camp by then. But so much of the world's trade, I mean, if things ever pop off in China, the U.S. is going to blockade the Malacca Strait, and it's like something like 1/3 of all global trade flows through the Malacca Strait. So if we plant submarines outside that and start sinking ships that move in or out, I mean, the economic calamity that would come with an attack on Taiwan would be unbelievable. And I saw a video last night that scared the living crap out of me, how basically one of the most likely responses, if China were to start indiscriminately bombing Taiwanese cities as part of this campaign, one of the most likely targets for a Taiwanese ballistic missile counterattack would be the Three Gorges Dam. And there's hundreds of millions of people that live in the floodplain of the Three Gorges Dam. If they were to launch a missile strike on a target like that, in response to Chinese indiscriminately bombing their cities, which is basically the Taiwanese equivalent of a nuclear deterrent, that would be the single largest man-made disaster in history by a factor of about 100. All right, you're talking tens of millions of people would have minutes to get out of the path of a wall of water a mile high if that were to happen. Maybe not a mile high, 1,000 feet high or something like that. But we're talking cubic kilometers of water that will just go flowing through the countryside. And there's something like a dozen cities with 1 million people or more in that floodplain. People would have minutes or hours, maybe for some of the further cities, they'd have a day to get out of the way. But you ever try to evacuate a city of a few million people in a day? It doesn't really work. So, the economic collapse, if things pop off in Taiwan, understatement, big time there, Alex. Let's not go there. All right, let's just stop shooting at each other. What an idea. Let's stop shooting at each other. Everybody, take a breather. All right, have a Snickers. Just Snickers for global peace. Snickers gets the Nobel Peace Prize as it stops World War III. The 8 to 12 trillion on top of 10 S&P. Not really sure what it is. Maybe the top 10 S&P companies profitable via China or advertising. I could see that. Thank you very much, Alex Lieberman. I appreciate the super chat and the support of the channel, sir. And thank you, Steve Woitis, who says Canadian economy is dead in the water compared to the U.S., which, in my opinion, the U.S. is also dead in the water. According to BNN Bloomberg, when the USA coughs, Canada gets the flu. I have seen a lot of talk about Canadian Forex or Canadian repo operations in the last day or two. I haven't looked into it myself, but I hear a lot of people talking about that one. And now Steve is saying, hey, Canadian economy dead in the water. Might be time to take a hard look at Canada. Mr. Trudeau, what are you doing up there, buddy? Maybe you want to fix your economy. Just a thought. No, forget it. Go with the climate thing and all the other stuff. Forget your economy. Forget your people losing homes and stuff like that. Petty things, right? You got bigger fish to fry over at the World Economic Forum. Thank you, Steve White, sir. I appreciate the super chat and the support of the channel. And thank you, everybody, for having your coffee with the Melon Heads this morning. Thank you to my Patreon supporters. I had a good time talking to you guys on our weekly Zoom call yesterday. Oh, real quick, we probably won't be doing our live stream tomorrow afternoon because I'll be on the road meeting up with some other YouTubers. More to come on that. I will have something to post during that time slot, though. So you'll still get your daily fix of Melon Head on Friday afternoon. Thanks, everybody. Hi, Mom. Hi, Dad. I love you guys. And until next time, live small and dream big.